What do you envision the S&P 500 to look like in 2024? A question that's on the minds of many financial enthusiasts. As we stand on the precipice of the future, it's only natural to wonder what lies ahead. The S&P 500, a benchmark of the United States economy, is one such curiosity. It's a barometer of our financial health, a measure of corporate prosperity, and a beacon for investors worldwide. So, what does the future hold for this powerhouse index? A multitude of factors come into play when predicting the trajectory of the S&P 500. Economic growth is a significant influencer. If the economy is robust and expanding, it tends to bode well for the stock market. Companies are more profitable, unemployment rates are low, and consumer spending is high. All these elements contribute to the buoyancy of the S&P 500. Another essential factor is corporate earnings. The S&P 500 is, after all, a collection of 500 of the largest companies listed on stock exchanges in the United States. If these companies are posting strong earnings, it suggests they are thriving. And when corporations prosper, so does the S&P 500. Interest rates too play a vital role. When the Federal Reserve lowers interest rates, borrowing becomes cheaper. This can lead to increased corporate borrowing and investment, which can boost stock prices. Conversely, when interest rates rise, borrowing costs increase, potentially dampening corporate investment and putting downward pressure on stock prices. Predicting the future is never an exact science, but understanding these factors provides a framework for informed speculation. As we delve deeper into the topic of what the S&P 500 might look like in 2024, we'll explore a range of perspectives, from the optimists who see a future of continued growth, to the pessimists who caution against overly rosy predictions. As we delve deeper into this topic, remember to hit the like button and subscribe to Caffeinated Money for more insightful content. Some experts predict a bull market for the S&P 500 in 2024. Let's take a moment to explore this optimistic perspective. Ryan Detrick, the chief market strategist at Carson Group, is among those who foresee a sunny future for the S&P 500. Detrick envisions the index testing record highs in 2024, supported by a combination of rising profit margins and increased corporate earnings. He's not alone in this optimistic outlook. Goldman Sachs strategists also predict a positive trajectory for the S&P 500, projecting an end figure of 4,700 for 2024. This represents a modest but promising gain of around 4.2%. Detrick's optimism springs from a few key factors. He's buoyed by the continued expansion of payrolls and incomes, as well as steady economic growth. These elements, in his view, should contribute to record profits for companies in 2024. Furthermore, he points out that election years of first-term presidents have historically been strong for the stock market, with an average gain of 12.2% for the S&P 500. Goldman Sachs strategists share a similar enthusiasm for the Magnificent Seven stocks, which include tech giant Nvidia. They expect these stocks to outperform the rest of the S&P 500. However, they do caution that the risk-reward ratio may not be particularly attractive due to elevated expectations. While this perspective paints a promising picture, other experts hold a different view. On the other side of the spectrum, some experts are less optimistic about the S&P 500 in 2024. One such expert, Marko Kolanovic, a quant guru at JP Morgan, believes that the stock market may disappoint investors due to overly optimistic S&P 500 earnings growth estimates. Kolanovic argues that high valuations and disappointing earnings growth could put downward pressure on stock prices. He points to weakening PMI momentum as an indication of negative third-quarter earnings growth. While Wall Street consensus expects 4% year-over-year growth in S&P 500 earnings per share for the third quarter, Kolanovic believes these projections are overly optimistic. He predicts that corporate pricing will soften, leading to a margin squeeze, and a weakening consumer could limit potential earnings upside. This is a stark contrast to the bullish views of some other market experts, highlighting the divided opinions on the future of the S&P 500. Kolanovic does not expect much to change in 2024. He believes Wall Street analysts are still too optimistic about earnings growth. He also notes that the negative effects of the Federal Reserve's interest rate tightening are yet to fully materialize, suggesting further potential headwinds for the stock market. In light of these considerations, Kolanovic recommends investors to stay underweight in stocks and increase bond allocations. He maintains a year-end S&P 500 price target of 4,200, indicating a potential downside of 4% from current levels. With these contrasting perspectives, it's evident that the future of the S&P 500 is open to interpretation. Whether you lean towards the optimistic or pessimistic perspective, the key lies in staying informed. The world of finance is a dynamic one where trends shift and economies fluctuate. It's like a never-ending chess game where every move matters and the end game is always evolving. And just like chess, to make the best moves, you need to stay informed. Now let's talk about a few key factors that play significant roles in shaping the S&P 500. First up is the Federal Reserve's interest rates. These rates can stimulate or slow down the economy. When the rates are low, it's cheaper for businesses to borrow money, potentially leading to growth and expansion. Conversely, high rates can cause businesses to cut back, which can slow the economy. Understanding these rates and their potential impact can help predict market trends. Next, we have corporate pricing. This refers to how much companies charge for their goods and services. If corporate pricing softens, it can lead to a margin squeeze, which could negatively affect earnings. On the flip side, if companies can maintain or increase their prices, it could lead to higher profits. Lastly, we must consider consumer behavior. The consumer is the lifeblood of any economy. If consumers are confident in spending, businesses thrive, and so does the economy. However, if consumers cut back on spending, it can limit potential earnings upside, causing a ripple effect across the market. These factors alone can give us a rough sketch of what to expect, but keep in mind they are just a few pieces of a much larger puzzle. The importance of staying informed can't be overstated. It's not about predicting the future. It's about understanding the present, so you can make informed decisions that align with your financial goals. Remember, the financial world doesn't stand still. It's a living, breathing entity that evolves with every economic report, every earnings announcement, and every geopolitical event. Being informed doesn't mean you'll always make the right call, but it does put you in a better position to navigate the financial landscape. The more we understand these factors, the more equipped we are in making sound financial decisions. As we wrap up, it's important to remember that predicting the future of the S&P 500 is not an exact science. It's a blend of data analysis, expert opinions, market trends, and a dash of unpredictability. We've explored various perspectives today, from the optimistic view of Carson Group's chief market strategist, Ryan Detrick, who predicts record highs in 2024, to the more cautious outlook of JP Morgan's Marko Kolanovic, who warns of overly optimistic growth estimates and potential market disappointments. We've also examined the insights from Goldman Sachs, who predict a modest gain of around 4 to 5% for the S&P 500 by the end of 2024. They caution, however, that the rewards may not be as attractive due to elevated expectations, especially for the Magnificent Seven mega-cap stocks. Through all of these perspectives, one thing remains clear: the importance of staying informed. The financial market is an ever-evolving entity, shaped by a myriad of factors from corporate earnings to economic policies, from technological advancements to global events. Staying abreast of these developments is crucial in making informed financial decisions, whether you're a seasoned investor or a casual observer. And remember, there is no one-size-fits-all strategy when it comes to investing. What works for one may not work for another. Therefore, it's essential to understand your financial goals, risk tolerance, and investment horizon. In the end, the S&P 500 in 2024 will be a product of various factors, some predictable and others not. Stay tuned to Caffeinated Money for more financial insights, and as always, remember to like and subscribe.